Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So this is the continuation of the last two videos regarding the introduction to financial accounting. Last two videos I have explained you the meaning of the term accounting, objectives, functions, then advantages, limitations, differences between bookkeeping and accounting, and who are the users of accounting. Then I have discussed about the accounting terms, some terms which are frequently used in accounting, single entry, double entry system, accounting cycle. All these things I have explained in the previous last two videos. So now this is the last video on introduction. In this video I am going to explain you about accounting concepts, accounting conventions, and accounting standards. These three topics I am going to discuss in this video. So in examination, very frequently a question will be asked, theory question will be asked regarding what are accounting concepts, what are accounting conventions, and explain about accounting standard. So by watching this video, you will be in a position to write confidently the theory question regarding accounting concepts, conventions, and accounting standards. Now we'll start our discussion now on accounting concepts. Accounting concepts are the assumptions or conditions on which the whole accounting is based. Every accountant will follow the accounting concepts while maintaining the accounts. That means these assumptions, these conditions, every accountant will follow while writing the accounts, while maintaining the accounts always. Whenever he is doing the work, it is understood that he is following. It is not necessary to be disclosed. That accountant should not say, I am following accounting standard, accounting concepts. The accountant should not specify that I am following accounting concepts. It is understood that every accountant will follow accounting concepts. So what is the meaning of accounting concepts? These are the basic conditions or assumptions on which accounting is based. Every accountant will follow accounting concepts while maintaining the accounts. There are many accounting concepts, but few of them I am going to explain you here, which are very, very important. The first one is business entity concept. Very frequently in short bit also examination, they will ask you in 4 marks short bit, what do you mean by business entity concept? According to this concept, the business and the owner will be treated as separate. A business is a separate entity, separate from the owner. Owner should not say that it's my business. Myself and my business are one and the same. No. From accounting point of view, the owner and the proprietor and the business are two separate entities. That means the transactions in the business will be recorded from the point of view of the business as an entity, not from the point of view of the owner. Even the business will view the owner also as an outsider. He has simply invested the money in the business. So a business is a separate entity. That means if we do not follow this concept, then what will happen? The personal transactions of the owner and the business transaction will get mixed up. If all the transactions are mixed up, then we cannot be able to get the clear financial picture of the business. We cannot be able to know what is the true profitability, what is the true financial position, because the personal transaction and business transaction are mixed up. That is the reason why the business and the owner should be treated separate. Even the transaction taking place between the owner and the business must be recorded. For example, when he invests the money, when he withdraws the money, those transactions should also be recorded. This is according to business entity concept. Next comes dual aspect concept or accounting equation concept. According to this concept, every transaction has two aspects, giving aspects and taking aspect. When we give something, we will get something. So both the aspects should be recorded according to dual aspect concept. Simple example, suppose a business sold goods. When it sells the goods, goods are going away and cash is coming in. So two aspects are there, cash and goods. Something we are giving and something we are getting. So both the things should be recorded. Cash account should be recorded and sales should also be recorded. Similarly, when we pay salary, cash is going out and the services of the employee we are getting. So salary account will debit, cash account will credit. So in this way, every transaction we will have two aspects. That's why one account is debited, the other account is credited. It is called dual aspect concept, or it is also called accounting equation concept, because in accounting one equation is there: capital plus liabilities is equal to assets. So any transaction which affects either capital or liability, the other aspect should be it will affect the asset. Or in other words, we can say capital is equal to assets minus liabilities. So this accounting equation we are getting mainly on account of dual aspect concept. When we follow dual aspect concept, it will make an equation called accounting equation concept, right? Then next one is going concern concept. According to this concept, the business is viewed to continue for a long period of time. There is neither the intention nor the necessity to wind up the business. That means when we write the accounts, we should keep in mind that this company, this business is going to continue for a long period of time. That's why assets will be recorded at cost, less accumulated depreciation. We have purchased an asset for rupees so and so. Every year we are providing depreciation, and presently what is the written down value of the asset we will write in the balance sheet. We will not write what is the market value of the asset. The market value of the asset may fluctuate day by day. That will not be accounted because we are not going to sell. We are not going to sell the asset. We are keeping the asset. So, according to this going concern concept, the business is going to continue for a long period of time. From that in contention only, we should write the accounts. Next one, cost concept. While recording the assets, we will record it at its cost, not at the market value. When we purchase the machine, for example, a machine is purchased for rupees 5 lakh. We record the machine as 5 lakh. Suppose during the meantime, the value of the machine has increased to 7 lakh rupees. So we will not account for increase in the value of the machinery. We will record the asset at its cost only. Then money measurement concept. According to money measurement concept, we will record only those transactions and events which can be measured in terms of money. Monetary transactions only will find place in accounting. Non-monetary transactions will not at all be recorded. Example, the efficiency or loyalty of the labor, of the employees will not be recorded. Or the efficiency or knowledge of the manager will not be recorded. Similarly, the sales policy implemented by the management will not be recorded. Only monetary transaction, any transaction which involves money, that will be recorded. That is money measurement concept. Last one, accounting period concept. The accounts will continue from when the business will start, and accounts will be stopped when the business is ended. That means throughout the life of the business, the accounts will goes on. For example, if a business life is over 100 years, the accountant cannot wait to stop the business when the business ends, will close the accounts. No, we cannot keep the accounts open for such a long period. So the life of the business will be divided into parts. Each part consists of 12 months period. So what the accountants will do, every 12 months the accounts are closed, and at the end of 12th month the profit or loss account and previous prepared balance sheet is prepared to find out the profitability, to find out the financial position. Next day onwards, new accounts will be prepared. So accounting period concept means, according to this concept, the accounts are prepared for a period of 12 months. At the end of the 12 months, all the accounts will get closed. The financial position, the profitable statement, income statement will be prepared. From next day onwards, new accounts will be started. So these are the 6 very important accounting concepts. Now I am going to explain you about accounting conventions. Accounting conventions are the basic principles or rules or usages, traditions, practices which are followed by accountant at the time of preparing the financial statements. At the time of preparing the financial statements, some usage, some customs, some traditions, practices will be followed by accountant. To make it more meaningful, to make it more real. That means financial statements should show clear picture. To show the clear picture, these accounting conventions will be followed. Now, a student must know what is the difference between concepts and conventions. Accounting concepts are those conditions or assumptions which are followed by accountant throughout. Throughout means always. Whenever he is doing accounting work, he has to follow accounting concepts. But accounting conventions are those usage, customs, traditions which are followed by accountant only once at the time of preparing financial statements, end of the year. Why these accounting conventions should be followed? To make the financial statements more real, more meaningful, more clear. For that purpose, accounting conventions are followed. There are many accounting conventions, but 4 important accounting conventions I will discuss it here. First one, convention of consistency. Consistency means uniformity. According to this convention, the accounting policies or accounting methods should be consistently followed from one year to another year. The accounting policies should not be changed every year. If we change the accounting policies, we cannot be able to compare the performance of one year with another year. Example, in one year the business follows straight line method of depreciation. In the next year the business follows reducing balance method of providing depreciation. So 2 years, 2 different methods are followed. Then we cannot be able to compare. So that's why this convention says the accounts should be prepared consistently. That means the accounting policies should be followed consistently. If it is compulsory to change the accounting policy, then its impact. What is the impact on current year's performance due to change in the accounting policy should be disclosed. Should be disclosed. This is according to convention of consistency. Now, convention of disclosure. According to convention of disclosure, all material things should be clearly disclosed. Material things should be disclosed means it is not necessary that every petty item should be disclosed. All the significant items, material items should be disclosed. That means nothing should be hidden. Nothing should be hidden. Example, in case of debtors, it is not necessary that we have to show the complete debtors. We have to show how much debtors are good debtors, how much are bad debtors, how much are doubtful debtors. We have to make the classification and show it. So disclosure, convention of disclosure says everything should be transparent. All the transactions and events must be clearly disclosed. Nothing should be hidden. Next, convention of materiality. According to convention of materiality, material items should be disclosed. That means the financial statement should not be overburdened by taking all petty items also. The small petty items can be ignored or clubbed with a number of other items. Only significant items, material items should be disclosed. The petty items, insignificant items can be dealt with, clubbing with other items. Next, convention of conservatism. Conservatism means playing safe. An accountant should play safe. Means record all expected losses but don't record any expected gain. This is called conservatism. If a loss is going to happen, it may happen. It has not happened, but it is expected that this loss is going to happen. That loss should be provided. That loss should be provided. But if a gain is likely going to accrue, if a gain is expected to accrue in future, we should not record the gain until and unless it is received. That is called conservatism. On this basis only, on the convention of conservatism only, stock is valued. Stock is valued at the lower of cost or market price, whichever is less. This is the application of convention of conservatism. Stock is valued at the lower of cost price or market price. So these 4 are the conventions. So 6 concepts I have explained and 4 conventions I have explained. Now I am coming to the last topic, accounting standard. This discussion I am keeping it very brief because another subject is the accounting standard. In that subject we will discuss more. But right now, briefly, in your syllabus for financial accounting students, briefly we want the information about what are accounting standard and what is the scope of accounting standard. That's what brief explanation I'm going to give about accounting standards. See here, accounting is said to be the language of business because accounting will communicate with parties regarding the through accounting financial statements. Through financial statements, an accountant will communicate with outsider. Simple example, suppose a business wants a loan from bank. When they approach to banker, the banker will ask the financial statements. By reading the financial statements, the banker will decide whether it is better or not to give loan to this business. How is the financial position of the business? The financial position of the business can be known through financial statements. The financial statements consist of profit and loss account, balance sheet, and all schedules, notes forming part of financial statements. So these financial statements are very, very important. Income statement, position statement, profit and loss account, balance sheet, schedules, notes, these are very, very important because so many people are taking the decisions on the basis of these financial statements. The financial statements should be clear, should be crystal clear. So how to make these financial statements? In financial statements, we will apply a number of accounting policies on different accounting aspects. We don't have a single accounting policy, we have different accounting policies. If different businesses follows different accounting policies, we cannot be able to compare. For example, a particular accounting aspect. This aspect have a number of accounting policies. And every business will follow a different accounting policy on the same accounting aspect. Then what will happen? We cannot be able to compare the performance of one company with another company. To harmonize this different accounting policies, the accounting bodies throughout the world are working hard to make a conclusion, to make a statement, thus how to deal with this accounting aspect by removing different accounting policies, to shortlist the accounting policies. So accounting statements are prepared by different accounting bodies. So every country will have accounting body. In India, we have the accounting body ICAI, Institute of Chartered Accountants of India. So this institute is having the responsibility of making a research on accounting, developing the subject accounting, the field of accounting. So this ICAI has formed ASB, Accounting Standards Board, on 21st April 1977. Why this ASB was formed? To formulate the accounting standards on different accounting aspects and issue these accounting standards throughout the country. How to deal with different accounting aspects with the help of these accounting standards. The purpose, the objective, to harmonize the accounting policy. That means same accounting policy should be adopted by every business organization. So that is the accounting standard. So what are accounting standards? Accounting standards are the statements on accounting aspects given by accounting bodies in every country. The main purpose of accounting standard is to harmonize the different accounting policies on different accounting aspects. That is the main objective. To make financial statements more understandable, more meaningful, more clear. So these accounting standards will be issued. So in India, the accounting standards will be formulated by ASB, Accounting Standards Board. And this board was formed in 1977 by the ICAI. They will formulate the accounting standard and issue it to the ICAI. The council of ICAI will issue the accounting standard to the government, to the business organization, to industries, to business organization, and persuade them to follow this accounting standard while making the financial statements. Now, ASB formed on 21st April 1977. First point you have to remember. And the main function to formulate accounting standard. The main function of this ASB is to formulate, to make this accounting standard. So far 32 accounting standards have been made from 1977 to till date on different aspects. On different aspects, accounting statements are prepared, formulated. Main function. Due consideration to IAS, International Accounting Standard, and try to integrate them to the conditions and practices prevailing in India. See here, every country will have their own practices, more customs, own customs. Every country has their own customs, has their own practices of accounting. So what this ASB will do, ASB will take the help of IAS, International Accounting Standards Committee. There is IASC, International Accounting Standards Committee, which will make research on different accounting aspects. So this ASB will take the help of IAS. Due consideration is given to IAS. Then it will adjust the IAS statement. The accounting statement given by IAS will be adjusted according to the prevailing conditions in India. According to the prevailing conditions in India. ASB will issue guidance notes on IAS and give clarification issue arising therefrom. It is not simply to make the accounting standard and issue it. After making the accounting standard, the ASB will make the guidance notes. And these guidance notes will help the organizations to implement this accounting standard. Make the clarification. ASB will review the accounting standard time to time. Once it is made time to time, it will be reviewed. Then the institute will issue the accounting standard for use in the presentation of general purpose financial statement issued to the public. Every organization will prepare financial statements, general purpose financial statements. So this accounting standard will be issued for preparing general purpose financial statements. This brief discussion about accounting standard. Now scope. What is the scope of accounting standard? First one, ASB, Accounting Standard Board, will make every effort to issue accounting standards which are in conformity with the provisions of applicable laws, customs, usage and business environment of a country. So this Accounting Standard Board will make the state accounting standard in such a way there should not be any conflict between the accounting standard, accounting statement and the customs and the law. There should not be any friction. That means both the accounting statement should be within the ambit of law. Then the accounting standard cannot override the local regulations which govern the preparation and presentation of financial statements in our country. That means this accounting standard board will see that this accounting standard should not go against the local law, local regulations, how we are making the financial statements. Next one, the accounting standard are intended to apply items which are material. The accounting standards will not be made for small, petty, insignificant items. Only for material items, this will be applied. The institute will persuade the government, appropriate authorities, industrial and business community to adopt these standards in order to achieve uniformity in the presentation of financial statements. The ultimate objective is uniformity in the financial statements. So ASB will persuade the government, the industrial organization, the business organization to follow this accounting standard. To follow this accounting standard so that there should be uniformity in the financial statements. Next one, in formulating AS, the intention is to concentrate on basic matters. The endeavors would be to confine AS to essential and not to make them so complex. The accounting statement will not be made so complex that it will be difficult for the organization to implement it. It will be kept as simple as possible so that easily it can be implemented and make the financial statements. Lastly, in the years to come, the accounting standards are expected to undergo revision and may become more effective. Still research is going on. This is not the end. Still research is going on how to make the accounting standard, how to make more and more accounting standard so that there will be uniformity in financial statements. Now, there are 32 accounting standards issued by ICAI so far. Till now, from 1977, 32 accounting standards have been issued. That's it. So, in this video, I have explained you accounting concepts, accounting conventions, and accounting standards. So, in examination, very frequently, theory question will be asked regarding these concepts. So, watch this video twice, thrice. Definitely, you can write in examination confidently the theory question. So if you are satisfied with my lecture, give a like to the video. Share my channel in your friend circle, in your group, so that more students can watch the video and enhance the knowledge. Give your comments. And lastly, don't forget to subscribe my channel.